Today we'll be continuing from where we left off during last week. So last week I had posted a video on alternative investment funds. We had tried to explain as to how an AIF works, what it is, practically how does it work and all those things. Now we are continuing with two small connected topics. One is venture capital funds and another is angel fund. Okay. So venture capital fund means it is an AIF. Okay. So by definition, venture capital funds means an AIF which has a very specific focus. So if you see the highlighted text here, the third paragraph, venture capital fund means an AIF. So it is an AIF, first part of it. Now where is it focusing on? That touches the second part of the definition, which invests primarily in securities of startups, emerging or early venture capital undertakings, mainly involved in new products, new services, a new technology, or a new intellectual property right based activity or a business model. And it includes an angel fund also. So that is why the topic of angel fund is also briefly explained in this video. Okay, now let's keep this technical definition aside and understand practically how an AIF or a venture capital funds work. Let's park the technical definition for a second and look at how it works in practical sense. Okay, so I'm going to name a venture capital fund and let's try and recollect and understand if we know that venture capital fund just by its name. Okay, Nexus Partners is the name of the venture capital fund. So I'll just minimize this screen and take you to their website. Okay, so this is how their website looks like, Nexus Venture Partners. Okay, I'm not scrolling down just to show you your exam. I'm not scrolling down right now. Now just think about it. How many of us know about this company? We may not. Okay, so let's to be fair about a split up, if there are 100 people in a room and we show the name of Nexus Partners, Nexus Venture Partners, I would say at least about 60-70% would not know. Okay, rest 30% may know. Okay, that's a different thing. Now let's go and see the funds, the companies in which they have invested and got a very successful exit. Okay, so in this we'll see big names. Zomato is one of the big names. Okay, these are all investments which they have realized already. And there is another big name here which is White Hat Junior, which were into online learning platform just like Byju's. They also had but they didn't have a bad turn like Byju's, but they also got a decent IPO listing. Now venture capital, what they does is they invest in these company at a very early stage wherein it is just in concept. Business is just in concept. It is not yet commercialized. Okay, so what they have is an early advantage. See, think of this scenario. Now we are living in a world where we can actually divide timelines into two: pre-pandemic and post-pandemic. Okay, pre-COVID and post-COVID. Pre-COVID, there were certain businesses which we never thought that could be successful, like grocery delivery to home, Zepto, which is very successful right now. Before 2019, okay, if we pitch an idea like this, how many of us would believe that, okay, fine, this will be successful? Okay, we had not that so successful Tata Big Basket also at that time, which used to deliver in one day. Okay, agility became the demand post-COVID, I would say. Convenience and agility. Now people are more preferring that, okay, fine, things get delivered to home. Okay, so what venture capitalists does is they have this vision of looking forward. They assess business potential of these brands and they invest at a very early stage wherein valuation of that business will be very less. Okay, so just to exemplify, this Nexus Venture Partners, they invested in Zepto also, and they have invested in a company called Rapido also. Rapido is now very popular and it is competing very neck to neck with brands like Ola, Uber and everything. Okay, so they invested about $10 to $11 million in USD in about 2019 or 18, that time period. It would have cost about 75-76 crores and they would have got 2 to 3% of what is Rapido's share capital. Okay, now Rapido's valuation is rupees 20,000 crores. Okay, now 20,000 crores. Now 3% of that 20,000 crores will take them to 600 crores, which is about 9 times of what they have invested in Rapido. So this is how venture capital works. They focus on a return of 5 to 10 times of their original investment. And how do they achieve that? They invest in these companies at a very early stage where no one has reposed confidence on those brands. Okay, now their areas of investment is very diverse. Okay, they could be into anything. To name a few, we have stated in textbooks like biomedical, biotechnology, medical services, communications. In India, most success has come in fintech, then our quick delivery platforms, IT sector. All those have been very successful in attracting venture capital investments in India. Now this chart gives us a bifurcation of what is the type of financing they give. They have broadly divided into early stage and later stage financing. To be very precise and to explain in a nutshell, whatever is stated in early stage financing is mostly pre-revenue for a company, which means that business is not yet commercialized, that company is not yet making revenue, not yet making profits, but it is all in conceptual stage. That is early investments. It can come in form of seed capital, and it will be used to build R&D, bring out the models of that project, build up a business model. For those purposes, these funds would be used. Next is startups. This is more risky. Okay, as I said, early seed capital will be invested in R&D. Now, startups, when they take investments, they will use this either in R&D or to go live on the market. Okay, then second round financing is when they have already commenced production, but to be profitable, they need more scale. For example, think of a platform like Rapido. They built a platform, they release the app in App Store. Now what they want is, they want to scale up. They want X number of downloads and X number of rides per day to make their company profitable. Now for that, what they want is, they want a massive scale up in terms of marketing, in terms of strategizing how to bring in revenue, in terms of building in a business model which brings more money in. Now for these things, they would need additional finance, which will come in form of second round financing. So here the product is already launched, but they are looking for a scale, which will help them in making more profits. Later stage financing is comparatively less riskier. Think of a situation where Rapido has enough number of downloads, is actually clocking in decent number of rides per day, is actually making money. Later stage financing is for their expansion, for their development capital. So this goes to their expansion initiatives. So they will try to expand their presence in many states, many districts, or even many nations. So when they do that, they will need additional funds, which will come in form of later stage financing. Okay, I'm not going word by word again, just to save some time, and essence of the topic needs to be conveyed more clearly. That is the intention also. Intention is not to read entire words in the textbook. Okay, then next topic is angel funds. Angel funds are also similar to venture capital. Venture capital by definition includes angel funds also. Now here, what is more for us to understand is, what is this angel investor? What type of a person can be an angel investor? Like in previous session, we talked about an accredited investor from the perspective of an AIF. Here, angel investor is also a person whose net asset is at least 2 crore rupees or more in terms of value. And on top of it, he should have experience in early investment experience, or has experience as a serial entrepreneur, which means a person who builds brands and sells it. Okay, and third, he is a senior professional, management professional with at least 10 years of experience. So he should meet two criteria. One is, his net tangible assets should be more than 2 crores of value. Two, he should fulfill any three criteria of any one criteria from the three of these, which means he should have an early investment experience, experience of a serial entrepreneur, or a senior management personnel with at least 10 years of experience. That is one person who can be categorized as a angel investor. Second is a body corporate which has a net worth of 10 crore or more, or an AIF or alternative investment fund which is registered under SEBI regulations, or a venture capital fund. These are people who can be classified as a angel investor. Okay, so this is just a brief about what is venture capital and angel funds and angel investments. To exemplify further, I would like to take one more name in this video. It is Anupam Mittal. He is one of the judges in Shark Tank and from People's Group, Shadi.com. Okay, he is one of those investors in this investors community. He is one of those persons who have invested in multiple segments, multiple industries. He's also, as I said, he is also one of the judges in Shark Tank. He is also one of the earlier investors in Rapido. So what is key for these venture capital investors and angel funds is that they understand the business dynamics of future. They really understand as to how future will pan out, what will be relevant in future and what will not be. Again, it is very risky for a venture capital fund if they invest. Like I took a name of a investment which was successful in terms of economics, which was Rapido. There could have been downsides also. They would have invested in some company which came up with a new idea and which never flew. Okay, they can end up in losses also. It is also high risk. When we speak about 5 to 10 times of reward, it is also equally risky. So the initial 70 crore which they put in can either come back to them as 500, 600 crores or can stay doomed also. That is also a possibility. But still, what makes them successful is their analysis, their understanding of the ground realities and their understanding of the business environment. Okay, so that's all about angel funds and venture capital funds. So if you have any questions on these, you can reach out to me in my coordinates which is given in the description of this video. Thanks again. Next week I'll be continuing from here or maybe come up with a new topic. Thank you everyone.